Welcome to the Daily Market Recap. Today is Thursday, July 30, 2026. What a difference a day makes on Wall Street. Investors went from nervously biting their fingernails yesterday to popping figurative champagne today as the bulls stormed back onto the trading floor. The major indexes staged a monster rebound led by a massive surge in the tech sector. The rally was fueled primarily by Microsoft's stellar earnings report, which proved to skeptics that massive investments in artificial intelligence are actually turning into cold, hard profits. The S&P 500 jumped 1.7%, the Dow surged over 600 points or 1.2%, the Nasdaq Composite skyrocketed 2.8%, and the small-cap Russell 2000 gained 1.4%. Looking under the hood at our sector chart, technology and communication services were the absolute star performers of the session. AI-linked hardware chips and cloud infrastructure stocks saw aggressive buying as dip buyers rushed in following recent pullbacks. On the flip side, defensive sectors like utilities and consumer staples lagged behind the high-flying tech rally as money rotated right back into risk assets. Despite today's green wave across the board, the CNN Fear Greed Index still sits firmly in fear territory at 39. That shows investors are still holding on to a healthy dose of skepticism, keeping one eye on macro risks even while buying the dip. The single biggest story driving today's action was Microsoft's blockbuster earnings release. After weeks of market anxiety over whether big tech was overspending on AI infrastructure without enough revenue to show for it, Microsoft delivered a crushing blow to the bear thesis. Strong cloud growth and surging enterprise AI adoption proved that spending is paying off handsomely. This single-handedly reinvigorated confidence across the entire semiconductor and cloud software space, offsetting concerns from Meta's increased CapEx guidance and pulling the broader market right back into green territory. Over on the macro front, the Federal Reserve officially wrapped up its policy meeting, choosing to hold benchmark interest rates steady in the 3.5% to 3.75% range. While the pause was widely expected, Chair Powell and the committee maintained a somewhat hawkish tone, signaling that inflation progress remains sticky and that future rate cuts will require even more definitive economic slowing. Bond yields fluctuated on the news, but stock investors quickly brushed off the hawkish vibes to focus on corporate earnings momentum. Rounding out our top stories, ongoing energy market volatility and global supply chain recalibrations continue to brew in the background. Crude oil prices showed intraday spikes before settling as traders weighed geopolitical developments against global demand expectations. While large-cap tech dominated headlines today, broader market analysts warned that persistent yield-elevated rates could keep a lid on valuation multiples if energy costs surge again. Now, let's dive into today's individual stock highlights, where single-day announcements created massive winners and painful drops. Leading today's leaderboard, Fervo Energy, FRVO, Iris Energy, IREN, Market Access Holdings, MKTX, and SanDisk, SNDK all posted explosive gains. Tech and data center momentum gave a massive tailwind to IREN and SNDK as traders piled into hardware and energy providers, powering the next-gen tech stack. Meanwhile, MKTX bounced back sharply following robust trading volume updates, leaving short sellers scrambling to cover. On the darker side of the street, Alnylam Pharmaceuticals, Alny, Rentokil Initial, RTO, Group 1 Automotive, GPI, and Fair Isaac Corporation FICO took heavy beatings today. FICO faced severe selling pressure following conservative forward guidance that disappointed growth investors, while Alny dragged down biotechs after clinical trial update comments sparked profit-taking. Looking at the charts for SPY, today's massive push put the index right back above key short-term moving averages. Immediate support now rests down at $735, with stronger structural support down at $730. On the upside, bulls face immediate resistance at $745, and a breakout above $750 could open the doors toward brand new all-time high territory. For the tech-heavy QQQ, today was a textbook bullish engulfing candle. Support is anchored strongly near $520, which held firm during recent selling. On the resistance side, QQQ is testing the $540 mark, with $548 sitting as the next major line in the sand for bulls to conquer. Small caps on IWM managed a solid green day, keeping its medium-term uptrend intact. Critical support lies at $218. If IWM can clear immediate overhead resistance around $228 to $230, small cap breakout traders could see another leg higher. Over in digital assets, Bitcoin held relatively firm post-Fed decision, consolidating around $64,400 to $64,700. Technical support sits firmly between $62,700 and $63,000, which buyers have defended aggressively. To spark a broader crypto rally, BTC needs to reclaim resistance between $65,000 and $65,700. Ethereum traded somewhat sideways, keeping its head above water around the $1,900 mark. ETH faces immediate technical support at $1,860, while overhead resistance remains caped around $1,960 to $1,980. The broader altcoin market remains in a watchful consolidation phase. While select AI and Layer 1 tokens picked up mild gains following tech earnings, overall institutional participation remains mixed as crypto traders await a decisive breakout from Bitcoin. Heading into tomorrow's session, sentiment is cautiously optimistic as earnings momentum offsets hawkish Fed chatter. Tomorrow morning, all eyes will be on key economic data releases, including monthly employment indicators and consumer sentiment reports, which could set the tone for weekly close price action. That wraps up today's market breakdown. If you enjoyed this video and want to stay ahead of Wall Street every single day, smash that like button and hit subscribe right now. See you tomorrow.